which is buzzing in trade after posting what was a strong set of Q4 numbers. It delivered its highest same-store sales growth in 7 quarters. Improvement in margins also were led by lower discounted sales. To talk more about this, we have Gautam Saraogi, who's the ED and the CEO of Go Fashion, joining in. Mr. Saraogi, thanks very much for taking the time out. Well, if you could just start by telling us about the same-store sales growth. You know, it's at a 7-quarter high. What was the absolute percentage that you clocked in terms of the same-store sales growth? And do you expect this kind of a trend to continue? What might you be targeting for FY26?
Yeah, see, I think last 6-7 quarters have been very tough in the retail industry. And we saw some sort of improvement in January and February. And January and February were positive same-store sales growth on a YOY basis. So Q4 was a good quarter for us. So we ended up with a same-store sales growth of about 2.11% on a YOY basis for Q4 versus Q4. So I think there is some recovery in demand, and we are optimistic and hopeful that the next 3-4 quarters also we should be able to report positive SSSG.
Okay. All right. So you're saying demand is coming back, right? That's the takeaway.
Yeah, there is definitely a slight improvement in demand, and that's what we witnessed through Q4.
So mid-single digit SSG should be gettable for FY26?
Well, internally, that's what we are going to be targeting.
Okay,
so
all right.
We will be as positive as possible.
Got it. What about margins? They've been in early 30s, range bound more or less?
I think we should be able to maintain margins over FY26.
Okay. Just give us a sense about, the cost factor then. You're saying that you'll probably be able to maintain margins. What exactly are the input costs doing to the business now? Do you need to take price hikes? Can you, based on the demand scenario that you're seeing?
See, I think from our raw material pricing concern, our raw material pricing is very stable. And I think in recent times, our gross margins also had improved about 100 to 150 bips. So I think we see consistent gross margins over FY26. Of course, rent and salaries are two very large cost items in our P&L. So if you are able to clock positive SSSG, I think those two line items also will be in check. So considering that, I think we should be able to maintain healthy margins in FY26.
Okay, all right. What about the store addition plans? I think last year that was around 62, and this year you had bigger plans. So could you tell us what's the number of stores you're looking to add?
Yeah, so Nigel, I think we'll end up with at least 120 stores, if not more. And I think our pipeline of stores is very clear. So we would be delivering 120 or more stores in FY26.
Okay. Is that the plan that you always had in mind, or is that, say, a scale up or a scale down based on what you're seeing?
No, I think, look, in the past, we've always delivered 120 plus stores. Last couple of years, we've consolidated our store network. So in fact, in FY25 also, we had opened about 104 stores on a gross level, but shut 42 stores at the same time. So our net additions was 62. So we are just basically increasing our store additions from 104 to 120 plus this year. And we don't see any major consolidations as far as store closures are concerned in FY26. So on a net number, we should be able to deliver 120 plus stores.
Okay. Correct me if I'm wrong, but you did have some plans of going global. Did you launch that store in Dubai?
Well, the store is going to go under fit out soon. So we are hopeful that the store should open before June 30th.
And what are you expecting from that particular store in terms of, say, sales, and what is the expansion that you're expecting, say, when you talk about a global expansion, since you are starting?
This international expansion, what we are doing, so for the Middle East, we are doing it through Apparel Group. So I think first step is to just first open the store. So we are not having any expectations as such. If the store does well, then probably Apparel Group will experiment with another couple of stores. So I think it's a pilot. So I think it's going to take its own time to mature. But from an expectations perspective, because this is the first time we are going there, so we are keeping expectations low. Hopefully, it should cross our expectations.
What does it mean in terms of the average selling price? That's been range bound as well, 750 to 800 bucks. How do you see this number moving?
So I think from a domestic India perspective, I think our average selling price would grow at about 2 to 3% on a YOY basis. And that this would be largely led by product mix. We are not looking to do any price hikes anytime soon.
Okay, no price hikes anytime soon. But you are also looking to expand into everyday wear?
Yeah. So I think, look, this is a new pilot we have thought of doing internally. See, from a Go Colors perspective, the consumer perceives Go Colors as a very functional, core, everyday product. And it's because we are limited to bottom wear. I thought this is a good time for us to expand our product portfolio into other categories of everyday wear. And ladies topwear is something which we've been evaluating for quite some time now. So we are looking to do a pilot in and open about 15 stores in the coming couple of quarters. And this 15 stores is going to be largely from our existing network. So what had actually happened was, though our average store size is about 400, 500 square feet, many of our stores were above 1500 square feet. So we are selecting 15 stores of our existing network, which are greater than 1500 square feet in size. And we are going to be introducing these newer everyday wear categories in those such stores as a pilot.
Okay, all right. We're going to leave it on that note. Gautam, thanks very much for joining in and speaking with us. So that's Go Colors talking to us about the expansion plans in the quarter gone by. We do have a couple of